Welcome back to Closing Trades right here on ET9. You're catching us live from SBI Live Studios, and we are discussing the market and the outlook with our whole host of experts. And let me welcome Somil Mehta on the show as well. Hi Somil, good afternoon and good to be speaking with you. The markets are seen to be taking a little bit of breather after that fantastic run-up we have seen all throughout the week. Firstly, help us with the levels that you are watching out for, and what's your outlook on the markets?
Good afternoon to everyone. My outlook still remains positive. In the short term, in the medium term outlook, the view is positive. Buy on decline should be the strategy. The only thing which I have been mentioning and I want to mention is that we need to focus more on sector specific and stock specific rotations. Sector specific rotation focus will give us good quality stocks to trade, invest both. Nifty, if we talk about Nifty, the crucial support in the very short term is 25,170. That is the first support for the markets, and the second support is at around 20 daily moving average, which is 24,900. So these are the two levels which we need to watch out for, and these are very crucial levels to keep a note of. This targets for Nifty would be 25,670. That is my first target, and the second target would be the all-time highs, which I'm expecting in the medium-term outlook. In Bank Nifty, very similar. There could be a breather, but the view still remains positive. Buy on decline should be the strategy. First support is at 55,100, which is 40 daily moving average, and the second support is at 54,560. This is the 20 daily moving average. So definitely, buy on decline should be the strategy. In the coming days, if I look at ICICI Bank, HDFC, all of these stocks, I think this Bank Nifty should outperform Nifty. So my targets on the upside for Bank Nifty would be 56,170. That will be my short-term target. And the medium-term target is around 57,300.
Okay, so those are the levels to watch out for on Nifty as well as Nifty Bank, according to Somil. But Sudeep, give us your sense on the IT pack. Now, this is a space where we've seen a lot of action over the course of the week. And despite the cut that we're seeing today, it is still touted to end the week with a gain of about 1%. Does today's move in IT make you want to rethink strategy in IT, or as we've interacted with a lot of analysts before, now that they're seeing some renewed optimism on IT after this recent run-up, do you believe that is here to stay, or do you believe IT is still a little bit of an unsafe territory right now?
Well, I still believe that there are a lot of challenges in the technology sector overall. And as far as Indian listed IT companies are concerned, I don't think they are out of the woods yet. The excitement has been on the back of the fact that Indian currency has depreciated sharply, and any currency depreciation from their perspective helps their revenue, because they earn in dollars and foreign currency, so it does help them. So that's point number one. Point number two, the interest rate reduction cycle in US has started, with Fed cutting rate by 25 basis points, and probably the indications are also coming that there may be more cuts going forward as the labor market continues to remain weak in US. Now that again does help IT companies, because the expectation is that loose money monetary policy will facilitate more spending by corporates in US, which in turn will result in renewal of contracts, incremental contracts, and kind of unlocking of stalled contracts. So this creates the optimism. But having said that, I think fundamentally there are some challenges as far as Indian IT companies are concerned, with AI coming and becoming the big thing in US and also world over. I suppose, and my guess is Indian IT companies are some distance away from being present in that space, and I think they will lose out some business going forward. Also, the margins will be under pressure because of the implementation of AI, because that tool will give the kind of companies a possibility of reducing the rates for IT services of Indian companies. So I think we'll have to watch this space carefully, but no need to jump into IT. Specific IT companies which are catering to sectors like travel and tourism, automobiles. These can be looked at because there is momentum in those particular sectors, and these service providers will be in demand.
All right.
Back with closing trades, about half an hour of trade left for the day as well as the weekend. Before the break, my colleague Ashesha was talking to us about how there have been changes in ethanol blending and the entire sugar industry is back in focus. Sudeep, your view on commodities like sugar, and lots of stocks have been in focus of late on the back of this ethanol blending story. But what's your take on the space overall, and if any stocks you're liking from this basket?
First thing, I think, this sugarcane industry and grain, I don't think they're competing. The market is large enough, and the government will definitely, ensure that there is a balance. Also, we have to remember that sugarcane is an extremely sensitive commodity. The government keeps monitoring because on one hand, there are retail prices, the other hand, there are farmers. And of course, there is an export angle, global markets angle. So they do the balancing act pretty well, and they have to continuously keep doing that. And we have to keep that in mind, number one. Number two, I think as far as sugar industry is concerned, because of the nature of the sensitivity of the sugarcane prices, as well as the farmer payments and the retail sugar price, government keeps changing regulations and changing guidelines and export quotas and things like that. So the counters remain volatile and keeps the price keeps moving up and down. So if as an investor you're able to withstand volatility, then you can come in sugar. Otherwise, you should not. Number three, as far as the overall industry scenario is concerned, we are positive on sugar at this stage. We believe that there is significant, opportunity and valuation upside possible from this industry at this stage. So one can look at multiple companies, but we do like EID Parry. You get an exposure to Coromandel International as well through this. So EID Parry is our pick in this sector.
All right, so that's the take coming in on the sugar space and select counters that Sudeep just highlighted. But with this, Sudeep, we let you go on that. Thank you so much for taking the time out and speaking with us. Really appreciate that. But with this, viewers, let's also get you some of the tradable ideas and STBT, BTST ideas from our experts. And Kunal, over to you. Help us understand which are your closing trade ideas.
So I'll go with two buy calls. The first one is on Hudco. That's a chart which is coming back into a breakout. Managed to break past about the previous highs of 220, 225 zone. So we'd look out for 236 as a target for BTST for Hudco. The stop loss could be kept at 224. The second would be a buy on Canara Bank. You can't take the PSU banks away because the way these stocks are showing signs of a synchronized breakout, I think is quite exceptional. Canara Bank, again today, I think the stock has confirmed that similar kind of a breakout about the previous highs of 115. So would suggest a buy with 125 as a target, stop us at 114.
On the stocks that Kunal is liking at the moment. Somil, what about you? Some BTST ideas you'd like to share with our viewers?
The first one I would like to mention is KFin Tech. KFin Tech looks good. KFin Tech has slide a bit today. Just give me a second. Little bit flat today. Have broken out of a small inverted head and shoulder pattern and given a small breakout as well. Taken support at 200 daily moving average, high top, high bottom formation. Great setup. Stop loss should be around 1115 and the target should be around 1225. So that would be my BTST call for the day.
All right, so those are the calls coming in from both of our experts. Let's watch out for that. But with this, let me also welcome Nitin Ahuja on the show as well. Hi, Nitin. Good afternoon. And Nitin Raheja, I beg your pardon. Nitin, hi. Very good afternoon and good to be speaking with you. Firstly, help us with your take on the markets. How do you see this? Because the next week is going to be really exciting, especially from the consumer point of view. But do you believe that the excitement with respect to the GST reset is behind us?
Well, I think stock prices have already built that in expectation of the post the cuts happening. If you see a lot of stocks are up 10%, 15, 20%, and so on and so forth. So a lot of that is built up, at least from a short-term perspective. My own view is that this is more of a longer-term trend because the impact of these cuts on consumption is going to play out over a period of time. And I think that along with low interest rates, low inflation, the tax changes that were made earlier in the budget should all result in consumption coming back pretty strongly, and that also consumption at the lower end of the lower K part of the consumption, which has been struggling all this while. So I think this festival season is very important from India's earnings growth perspective, because the markets, if you look over the last 1 year, have given virtually no return. And that's primarily because the kind of slowdown that we saw in the GDP and economy was absolutely, it caught the market on the wrong foot. And hence you saw the markets adjusting to a slowing growth over this last 1 year period. And I think so this particular festival season in that sense becomes very important.
Right. Okay. So that's the take coming in on the overall consumption space. But Nitin, also want to get your view on some of the sectors other than core consumption, your core staples or discretionary, where we've seen big GST cuts coming in, the likes of tires, you have auto banks in focus, and also insurance. Now, of course, after the news that we received of cuts on these sectors, the stocks have run up. But insurance is something that in a longer term would also reflect well for the company if more insurance premium is paid or like more insurance is subscribed to. Do you believe that insurance right now on the back of this GST cut is a slightly medium to long term positive story?
No, absolutely. I think we are very positive on that sector. And it's because, relatively, we are an underinsured nation, correct? And I think what happened in insurance, more than the GST, if you ask me, was the changes in the regulatory environment that took place over the last 1.5 years. All of that really impacted the profitability and the business models of different insurance companies. I think we are through with most of that regulatory overhang, which is now behind us. So in that sense, I think insurance is back. I think insurance should be a part of the core portfolios.
All right, that's the take coming in on the insurance space right now. But today is one of the days wherein FTSE quarterly changes. We will see the flows to come in today, and especially in the last half an hour, the adjustments were expected to be made, and select counters are reacting to that. I believe that it was Swiggy that is expected to see an inflow of almost $100 million as per Nuvama, and that stock was seen to be inching higher. Even Asian Paints is also in focus. But Kunal, particularly on Swiggy, what's your current chart check, given the fact that we have already seen quite a run-up in this particular counter off late and throughout the week? If I can check, the stock is already having a run-up of 8%. Where do you see the stock headed post this 455 levels?
Yeah, so far, I think for the month it's up 11%, but I think it's a good gain for the stock price because this comes, or this brings the stock into, I think again, if I'm not wrong, fifth consecutive month of, price uptrend. And 5 months back, the stock was tottering at 330 kind of a range. And now for the stock to try and make a comeback, with all the positive signs, that augurs really well for the price trends over the near to medium term. And it's been a very stable uptrend for a stock like Swiggy. It's not as if that the stock has gone through a V-shaped recovery and the pace has been very steep. It's been a very gradual recovery for the stock price, and it tends to go into that zone of an odd correction, consolidation, tries to just cool off, from those highs, and then come back into a moving average retracement. So I think for a short-term trader, this could be a classic blended opportunity, where if you're looking to buy the stock in terms of a classic trend, riding the trend on the upside, then I think you'll have to just wait out for that point of retracements for the stock price. Currently, the support for the stock is around the 425 to 430 range. So which means that if in case the stock goes into such a similar process of retracement closer to that 430 range, that could be a good risk reward entry point for Swiggy.
Okay, so that's on Swiggy. But Somil, you know, while we're talking about Swiggy, I have to ask you about Eternal as well. It's only listed peer in this space. Give us a sense on the kind of move that we've seen on Eternal. Let's fire Eternal and let's fire a slightly longer term chart for Eternal, because I just want to see in the last 1 month, 3 months what the stock has done. Last 6 months, there it is, a 50% uptick, in fact, coming in on the stock almost in the last 6 months itself. 336 thereabouts. Somil, I believe close to the fresh high for the stock. And are there any more upsides that you're seeing on the charts, or do you believe that after the kind of run up the stock is seen, it's time for some cool down?
No, I think it will continue. In the medium term outlook, definitely. In the very short term, I don't expect it to keep going. I expect it to consolidate, take its time, take support at averages, do the retracement for the previous rally, and then start the next move up. So all this needs to happen for a healthy run up, for a healthy uptrend. It's in the uptrend, long term, medium term, even in the short term, a great buy at these levels for a positional buy. I won't expect anyone to trade in the very short term, but in the positional trade, I think 320 should be the stop loss. And I think the next target would be around 360, 370 levels.
All right, so that's the take coming in on Eternal. Definitely what a move it has seen in the past 6 months. Almost a 50% jump is what we are getting to see. But time now to slip into a very short break. Don't go anywhere. Lots more to talk about on the other side as we count down to the market close.